FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. Happy June 1st, 2018. We made it. The markets made it. And lots of interesting things happened during the month of May. May is behind us now. So we're here with Mickey Fulp, mercenarygeologist.com. And don't forget, send us your feedback. We love it when you're part of the show. Email address kl@kerrylutz.com. Mickey, hey, happy June 1st.
The year is flying by, Kerry, and the markets go up and they go down as the world according to Trump turns. The Dow and the S&P 500 have been range-bound for the last 3 weeks or so. Dow closed the month at 24,416, up 1%. S&P 500 had a better month at 2705, up over 2%. The big winner was NASDAQ, up a whopping 5.3% to 7442. That's 2.5-month high. And actually, the best performer, I stand corrected, was the Russell 2000, up to a record high, all-time high on Wednesday, dropped off a bit yesterday, closed the month at 1633, up almost 6%. Small businesses prosper in the United States.
Yeah, that is the fact. And, things are looking up. Employment numbers are up, and even payrolls are starting to rise in response.
Yes, sir. Meanwhile, let's go north of the border. The Toronto Big Board, the TSX, had an early month uptick. It's been flat over the last 2 weeks. The Canadian economy is not doing particularly well. The BOC, Bank of Canada, postponed anticipated rate increase. We have a weak loonie, basically because their oil patch sucks. That said, the Toronto Stock Exchange was up nearly 3%, but it was down. It's still down on the year. It closed at 16,062. The Venture Exchange is now down over 10% year to date, closed at 763. We haven't seen these values for nearly a year. No one really cares. No volume in the Toronto Venture Exchange. Emerging markets, the MSCI was down for the 4th month in a row to its level, basically at the end of November of last year. 4 months down, as I said, it closed at 1121, down almost 4% over the month. And the VIX has calmed down, settled into the low to mid-teens. Not a lot of volatility in U.S. markets. Closed the month at 1543.
Yeah, interesting. Let's see. I bet it'll go back to those really low levels, like 9 through 11, if the markets continue on the way they have been. So looking at our money, there was some movement there as well.
Oh, my. Yeah, the U.S. dollar has surged over the last 6 weeks. It's up well over 4 points. Actually, it was up over 5 points at one point till Trump did his deed yesterday on Mexico and Canada. It still closed the month at 93.98. It was only 6 weeks ago. It was below 90. That's a 2.4% gain. Euro at a 8-month low at 117, or actually rounded up to 117 for over a 3% loss over the month. 10-year Treasury actually went above 3% for a few days in mid-May. That was a 4-year high. Then it backed off on a very dovish FOMC meetings, minutes from their meeting, closed at 2.83, down 4% for the month. And Bitcoin, much less volatility this month, only down 18% to close at 75.37.
Yeah, another retracement. I think it's going to test the low of 70.80. That was the closing monthly low 2 months ago. And if it breaks it, we could see 5,000, which, would be about right. 4,000 to 5,000 is kind of what I said in December. And it would just make sense to be an 80% retracement. So buckle your seatbelts. If you're in the cryptos, had Trace Mayer on last week, and he's saying just don't bother playing any other cryptos except Bitcoin, because it's much like the U.S. dollar. It's the cleanest shirt in the laundry. So just something to bear in mind. And now we go to our favorite segment, the metals.
Yes, Kerry, gold broke below its 200-day moving average when it went below 1,300 for the first time in 2018. That was on May 15th. It has remained below that 200-day moving average, which I think is about 1,304 right now. Until it busts above this, it's very susceptible to bear moves, and with the summer doldrums coming up, we could see a lower price for gold. Meanwhile, silver, interestingly enough, it has closed the month plus or minus 5 cents, a nickel, over the last 4 months. This month, it closed at 16.39. It actually gains 9 cents on the month. But even the silver bugs appear not to care about silver right now.
Yeah.
The platinum group metals, palladium, platinum, really had ho-hum months too. Platinum closed at $9.05, up $2. Palladium closed up $22, but it's still at $9.82, well below its all-time high of $11.22, set back in January, if memory serves. And finally, copper. It's been volatile over the last month on a daily basis. Some moves 5 to 7 cents per day, but really it has had no direction. And a lot of it, once again, depends on what Trump's talking about, trade tariffs. For those interested, I wrote a musing, which was published last week, about the near-term prospects for copper. It's an exhaustive review of the subject, and I encourage you to go to the website and check that out. Copper closed at $3.11, up 3 cents on the month.
All right, and now we go to our energy sector. We definitely had some movement there, and it was, hey, the Wall Street Journal is now ripping off our measure, the ratio that you created, Mickey, the WTI to Brent. I never have seen any mention of it anywhere in the close to 7 years we've been doing the monthly review. And yet,
really?
And yet, all of a sudden... It
seems so intuitive to me. I don't know.
Yeah, well,
anyway,
yeah.
Well, I don't think we're going to sue the Wall Street Journal. That would get us nowhere very fast. So, but oil had an extremely volatile month. When the Iran deal, when Trump killed that, both oils surged. WTI briefly spent time above $72. Then when OPEC came in the middle of last week and said they were going to increase production, along with the Ruskies, WTI fell off the shelf. In my opinion, it rose too far, too fast. Closed the month at 67.10, down 2%. But the real thing that you mentioned, real story, is the arbitrage with WTI, now at a whopping well over $9. And this has it's been very good for the U.S., led to record U.S. oil exports. Brent closed the month at 77.50, up almost 3%. Here's a little tidbit for you to show you how bad it is in the oil patch in Canada. My little state of New Mexico has 91 drill rigs turning to the right as of last Friday. The entire nation of Canada had 81. So that explains the weakness in the loonie for a big part. Finally, Henry Hub was up 4% to 288. This is really weather control this time of year as we enter the air conditioning season in the greater part of the southern half of the U.S. One concern right now with natural gas, and that occurs in the Permian, and we've talked about this before, about infrastructure difficulties with oil pipelines getting to market. There's going to be a bottleneck if there isn't already from the Permian Basin to Houston and Beaumont and Corpus Christi. But came out this week that captive gas in the Permian is becoming a problem. So there are no pipelines to transport the gas, or not enough pipeline capacity. Oil is booming. Shale oil is booming in the Permian Basin. But if you can't move the gas and you can't flare it, then you're going to have to shut in your oil wells. And this is really negative on WTI. So in addition to oil pipelines, we have gas pipeline capacity problems. And then at some point for U.S. exports, we're going to have port capacity problems in the Gulf Coast as we move all this light sweet crude to places like from Corpus Christi all the way over to New Orleans. And then let's talk about uranium. Uranium had a very good month, up 7% to close at 2260. Lots of positive news. U.S. budget has, as it is constructed for 2019 right now, has funding for the cleanup at Portsmouth, which means DOE surplus sales of uranium will go away. Something on the order of 8 Japanese reactors have restarted or in the process of restarting. Kazakhstan's cutting its production 3% over the next year. And here's a fact that is quite amazing to me. U.S. production in Q1 of 2018 was at a 70-year low, Kerry.
My goodness.
Let's do the math and look back on that. That's 1948, and there were no nuclear power plants. And prospectors were in the Colorado Plateau with Geiger counters looking for petrified logs that contain uranium. That shows you what a world of hurt uranium mining is in the U.S.
Well, it's also the producers are buying it now in the spot because they can't produce it as cheap as they can buy it in the spot, and then they're using it to fulfill some of their contractual obligations. So
right, yeah,
it's the perfect arbitrage of buying short and selling long that is going to come back to bite them and also raise prices.
Well, it's you know, for these uranium mining companies to survive, that's the only choice they have right now. So two of the larger producers are basically in the U.S. That would be Energy Fuels and UR Energy have filed a Section 232 request regarding national security and urging the DOE to require that 25% of uranium used in reactors in the U.S. be domestically mined. So I'm not usually a big supporter of government subsidies, but in this case, for national security issues, I think it's paramount that we get this through.
Yeah, it's got to be if you want a healthy uranium industry, which both for national security reasons and for energy policy, you got to have it.
Well, it's very scary. We get something on the order of about 40% of our uranium a year from 3 countries that I would not say are friendly to the U.S., and that's Russia, Uzbekistan, and Kazakhstan. Mm-hmm. So, yikes.
So have utilities been loading up on the spot market I mean, if
not really, they are getting their immediate needs on the spot market, but there comes a time when the piper has to be paid, and the uranium utilities or the utilities that use uranium in nuclear power plants have basically gone to a hand-and-mouth sort of situation, which is quite different. They usually have 2 to 3 years of inventory. And when they start building those inventories again, decide they will tend to move en masse, which is why we continually say that the uranium bull is coming.
Yeah, well, every dog has its day, as they say, and uranium will have its as well. No doubt. It just reminds me of sugar in the 70s and 80s. No one wanted it. You couldn't touch it. It was like they were going to have to give it away for free. It was down to like 2 cents a pound. And then all of a sudden it went up, 4 years later to 12 cents a pound. It's going to be the same thing with uranium. It's just, that's the way markets work.
Absolutely. And that's the reason we are contrarians, Kerry.
Absolutely. So, hey, moving on to the ratios. So let's look at that energy, the Brent to WTI, like you said, it's going back way up. It's at 1.15. That's pretty significant.
Yes, it is, Kerry. We haven't seen levels like this in over 3 years, going back to the oil crash in early 2015 when it went to these sorts of ratios. Very good for U.S. export, record U.S. exports of light crude. We just do not have the refinery capacity to deal with all the shale oil we have. So all told, it's very good for our balance of payments in the oil patch, and very good for the outlook in 2 or 3 years when if the current paradigms continue, we should become energy sufficient or energy neutral in terms of imports and exports in the United States.
They'll pretty much cancel out. Hey, just going back to the WTI and the situation there, Mickey, just going back to the Henry Hub, okay?
Yeah.
You got these ridiculous low prices here. It makes it a major export opportunity. You're looking at 288 per million BTUs. You cannot build a natural gas pipeline with those kind of prices. And the Permian, one thing got to note is that every time you frack a oil well, you wind up with natural gas, right? You can't.
Well, that's the problem, exactly, Kerry. Yeah.
So it's a real problem, or it looks like a problem at this point. But my feeling here, Mickey, is that at some point it's going to become a profit opportunity for the operators in the Permian and elsewhere, because natural gas, you said we're getting to the point where we're hamstrung by port capacity, but Trump energy-friendly administration will probably allow expansion of existing ports and building of new ports, which take many, many years, but maybe he can cut the red tape and get that through a lot faster. So at some point, this natural gas depression that we've had is going to turn around. I mean, it's up from where it was in its lows in 2016 when it broke $2. But, even at close to $3, that's just not high enough to really reward the risks involved. And if you don't have wet gas, who's going to produce dry gas at 288?
Well, the gas we're talking about in the Permian right now, I mean, gas is not the target. Oil is.
Right.
But with every oil well, you're going to have some gas. And in fact, a lot of these would be originally gas driven from the pressure. So the oil wells. So it would be my contention that the gas they'll find a way to move the gas to market through pipelines. I mean, we're building a big oil pipeline right now from the Permian to the Gulf Coast. To me, it seems like a temporary bottleneck. All this stuff seems like temporary bottlenecks because we got good old Yankee ingenuity in engineering, and we love it, love to make a buck. So if at some point you've got to start shutting in oil wells because you can't move the gas, then you're hurting the bottom line, and ways will be found to get around this. Right now, the real problem is the Texas Railroad Commission, which oddly enough, if you've ever worked in an oil patch in Texas, you know the oil patch is regulated by the Railroad Commission.
Yeah.
A remnant of the 1910s to 20s to 30s, I think. But regardless, there are rules and regulations on flaring of gas, and at some point, either those rules and regulations will be relaxed, or we'll get pipelines. And a lot of times, it's pipelines from the wellhead to a gas plant. So it's not a pipeline that you got to transmit it all the way to the Gulf Coast. You just need to get it to a gas plant. So regardless. These are technological and economic issues, and if there's one thing we know about Texans, they're good at solving both those problems.
Absolutely. You are correct. And actually, the Texas Railroad Commissioner is largely regarded as the most powerful elected position in the state, even by some ahead of the governor, because the governor really doesn't have a lot of power in Texas, but the railroad commissioner sets all these conservation rules. You know, it's like alternate side of the street parking in Manhattan. You know, you can only park on the left side of the street Tuesday, Thursday, and Saturday, and the right side of the street Monday, Wednesday, and Friday. That's what pumping oil is like in Texas. Yeah. All of these crazy rules, and they've been challenged. Supreme Court case, I think in the 20s or 30s, I think the 30s, and the U.S. Supreme Court upheld their right to restrict production of oil, because otherwise...
Well, there's good reasons for that. If you produce too fast, you lose the drive. So there's reasons to shut flowing wells in for all but 20 minutes a day at times.
Yeah,
so
but...
Good technical reasons, Kerry. There's a reason that the East Texas oil field, which has produced well over 7 billion barrels of oil, imagine that, still has flowing wells today, wells that have flowed since the 1930s.
Yeah, pretty amazing. And you look at fields in Russia, and they've been decimated. They've drilled the holes too close together. They've overproduced and dissipated these fields.
Yeah, they dissipate the drive. I mean, you know, you've got to have pressure, either through overburden pressure or gas pressure or water pressure, to be able to move this oil up the hole. So conservation's a good thing in an oil patch.
Yeah, I guess it's worked, but there's been, well, we don't need to get into it. Anyways, that is it for the market review for May 2018. We'll be doing the same thing for June come the first or second day of July. And interesting trends here, especially in energy and Bitcoin. So let's see what happens next. Anyway, find Mickey's work over at mercenarygeologist.com and at mercenarygeo on Twitter. Hey, you find us over at financialsurvivalnetwork.com. Sign up for both our newsletters. They're free. Best bargain on the internet. And hey, follow us on Facebook. Wherever you want to follow us, we're always someplace. YouTube, you name it. The YouTube channel's been crushing it lately. I have no idea why, but if you're on YouTube, hit that subscribe button, because evidently it moves the algorithm and gets the show in all sorts of other places that it wouldn't otherwise be. And Mickey, hey, we'll catch up with you next month, same time.
I look forward to it, Kerry. Thanks for your time.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.